So the first thing that I learned about the financial and commodity markets is to not fall in love with high-flying assets. And of course, that's actually what's worked lately, ironically. However, I also learned that hating markets that everybody else hates generally is a bad move in the long run. Warren Buffett said it best when he said, "Be greedy when others are fearful, and fearful when others are greedy." I can't help but feel like the energy markets are in store for a face-saving rally. It's really, really difficult to find anybody on the stock side or futures side that thinks natural gas or crude oil are going to go higher from here. In fact, that is precisely what we think might happen. Before we talk about the details, let's remind everybody we are trading futures and options, or talking about trading futures and options. It's not suitable for everybody. There's substantial risk of loss in trading. So let's go dive right into the crude oil chart. Now keep in mind, the seasonal low for crude oil tends to be late January, early February. So we're right there. So seasonally, the market should start finding some buyers sooner rather than later. Now, of course, seasonals are just a tool. They're not a guarantee, but more often than not, they do work, and going against them is generally a bad idea. So with that in mind, we are approaching both crude and natural gas with the idea that the seasonal low is probably looming. Now, to be fair, the seasonal low in natural gas generally takes place in late February. So we're maybe jumping the gun a little in natural gas, but that said, I think there's a good argument to be made that because of the seasonally warm temperatures, we could be, the seasonal move could be early, in other words. And also, if we're going to take a look at a chart as well, and we'll see why we think maybe that's exactly what's going on. So anyway, here's a crude oil chart. It's a weekly crude oil chart, so each price bar represents 1 week. Now, to be honest, we didn't think this particular sell-off would go quite this deep. We were looking for the low 50s to hold. It now seems apparent that the low 50s weren't enough to kind of shake out the weak hands. So, but we do think $50 a barrel is probably good support, both psychological and technical. In fact, in 2019, oil bottomed out in the $50 area 3 times. This will be the 4th test of that area. That said, we wouldn't be shocked to see the high 40s come into play, 49, 48. Crude oil is a really messy market. Even if the $50 area holds, that doesn't mean it's going to reverse and it's going to be a clean turnaround. That's just not how crude oil trades. So expect some volatility, and it could be a rough ride. But with that in mind, we do think the lows are probably sooner than most people assume them to be. In fact, it seems like crude oil is just completely melting down, and it is, I mean, because we've come a long way in a short period of time. But if you look at the chart, we're actually in the exact same trading range we've been in for the last year. So although it's moving a little quicker than it has, we're still in the same trading range. And if you scroll back through the chart over the last couple of years, we're actually in a low volatility period in crude oil, which is hard for a lot of new traders to grasp. Should the $50 area hold, as we expect, we should make our way up to the upper end of the trading range. There's going to be some resistance around the $60 area, maybe the low 60s. But if we can break that, I think we finally get the move that most people aren't expecting at this point, but people were expecting a month or so ago when crude oil was pressing into the low 60s. I think we could see the mid-70s. I don't think it's out of the question. Above that gets to be a little bit tough. Fundamentals maybe don't support prices above 74, 75 unless the dollar turns around. If the dollar turns around, all of these prices are out the window. We could easily see 80s and 90s. So just keep that in mind. Just because everybody hates crude oil and oil, whether it's for fundamental reasons or political reasons or whatever it is, crude oil and gas, that doesn't mean that we should throw the baby out with the bathwater. There are definitely some arguments to be made that maybe, just maybe, there could be some buying coming in. So let's look at natural gas here. Before we look at the natural gas chart, I want to point something out. There are more speculators short, or at least large speculators. These are speculators with deep pockets, sizable trading accounts, and are trading large contract sizes. Large speculators are holding the largest net short position in the history of natural gas futures. This is according to the CFTC's COT report, and that's the Commodity Futures Trading Commission and their Commitment of Traders report. According to the latest figures, there are roughly 261,000 net short contracts being held by large specs. The theory is, a lot of people might look at that and think, well, I want to sell if all the big boys are selling. I want to be short. But the reality is, we could be getting to a point where the quote-unquote big boys, their position is too big, and they could run out of selling. I mean, it's kind of like squeezing blood out of a turnip. If everybody's short, who's going to be left to sell? And eventually, those that are short, and hopefully they're making a little money, they probably are, eventually they're going to want to take profits, or they're going to place stop orders and they're going to get stopped out. In other words, eventually those that are short will need to buy to get out. So the only way to get out of a short position is to buy, right? So if everybody's short, nobody's left to sell, what are they going to have to do eventually? Buy. And when they do, the market could turn around. And keep in mind, when a market's overloaded like this, when a position is overcrowded, fundamentals really don't matter. The market can turn around on a dime, and it can turn around hard just with people offsetting their open positions, regardless of fundamentals. So this is a look at the weekly chart of natural gas. The 2016 low was $1.60. We're currently trading in the low 180s, which in modern day is considered relatively cheap for natural gas. In fact, we really haven't spent a lot of time under $2 in the last several years. We have spent some time under 2, again in 2016 when we dipped down to 160 on the front month. But generally those moves or the sub 2 prices have been short-lived. So with that in mind, we can't rule out a dip to 160, but we also certainly can't rule out a rally. Like we mentioned, everybody's short. We're sitting on trendline support. There's definitely a good argument to be made that perhaps all of the bears have already acted and things are about to turn around. An indicator that we like to look at is the RSI, the Relative Strength Index. This gives us an idea of oversold and overbought markets. This is the most oversold we've seen natural gas since 2016, which at the time we did get a little more oversold than we are now. But the bottom line is it's probably too late to be a natural gas bear. But even if it's a little too early to be a bull, that's probably the right side of the market to eventually be on. Again, we're trying to beat the markets. We're speculating. There's no crystal balls or guarantees. We're just showing you what we see. Now, keep in mind, in the past, when natural gas gets oversold, short covering alone can trigger an 80-cent to $1 rally. So that could put us in the $2.80, $3 area without anything changing fundamentally. And if we do get a little help from fundamentals, perhaps a lower dollar or some supply issues, the market could break above 3 and head towards 5. We're not really counting on a move to 650, but that's exactly what happened in 2011 after bottoming out at the current prices. So if you're interested in learning more about trading futures and options, we'd love to hear from you. We are DeCarly Trading. We're a brokerage service. We're located in Las Vegas, Nevada. Here's our website. It's decarlytrading.com. There's plenty of educational material, videos, articles, all types of fun things. You can even open a paper trading account and test it out. We've also written several books. The book that I recommend is Higher Probability Commodity Trading. It covers a little bit of everything, market analysis, strategy development, risk management techniques, so on. So once again, we're DeCarly Trading. We hope to hear from you. Thank you.